Okay, let's dive in. We're looking at something pretty wild today, aren't we? Something that really connects, internet culture, speculative fun, and serious finance.
Absolutely. It's a fascinating intersection. We're talking about a meme coin, Dogecoin, making a formal entrance onto Wall Street via an ETF.
Yes, that Dogecoin, the Shiba Inu face, the whole thing.
Yeah.
It's kind of historic in its own strange way. Welcome to Everything You Need to Know About Finance. Today, we're really focusing on this new development, the Rex Shares Osprey Dogecoin ETF. The ticker is DOJE, DOJE.
And it's expected to launch pretty soon, right? Like this week, around September 18th, 2025, give or take.
Exactly. Now, just a quick heads up before we get into the weeds. This isn't financial advice, not at all.
Well,
It's just us doing a deep dive on, what this actually means. And hey, if you find this kind of analysis interesting, please do like and subscribe. It helps us keep digging into these topics.
definitely. So DOJE, what is it? Basically, it's an exchange-traded fund designed to give investors exposure to Dogecoin, but crucially through the regular, traditional financial system.
And that's the kicker, isn't it? It's not Bitcoin, not Ethereum.
Mm,
This is being called the first major U.S. ETF for a meme coin.
exactly. A coin that, let's be honest, started as a joke. It doesn't have the same kind of built-in utility narrative as some other cryptos. That's what makes it so noteworthy.
It really does challenge how we think about these financial products. So,
Okay.
okay, let's unpack this. Why Dogecoin for an ETF, and how on earth does this structure even work?
Well, Dogecoin is sort of the quintessential meme coin, isn't it? These things often lack, a clear economic purpose or utility in the traditional sense.
Mhm.
Their value, their popularity, it often surges based on internet trends, maybe a celebrity tweet, pure speculation.
Like Shiba Inu or Bonk, those kinds of things.
Precisely. And even though people are skeptical about the underlying value, they attract serious money. Billions sometimes. Dogecoin itself, remember, started way back in 2013. It was literally a joke, poking fun at Bitcoin and the whole crypto scene.
Never meant to be traded on Wall Street, that's for sure.
Not in a million years.
Yeah.
But here we are. It's become this significant, though, yeah, incredibly volatile digital asset.
It is a strange journey, from a joke online to something institutions might actually buy. I saw some commentary calling DOJE the first ever U.S. ETF to hold something that has no utility on purpose.
That phrase really nails it, doesn't it? It highlights just how unusual this is.
And Dogecoin hasn't exactly been quiet lately either, has it? Performance-wise?
No, not at all. Actually, despite everything, it's been one of the better performers over the last month or so, up about 15%, even with a small dip recently.
Hmm.
It just shows there's still this persistent, maybe unpredictable, but definite investor interest there. Its history is all about these huge swings, often driven by social media buzz.
Right. Elon Musk tweets something and it goes nuts.
Pretty much. It's a real testament to, well, community power and speculation in this digital age.
Okay, so here's where it gets technically interesting, right?
Yeah.
How is DOJE actually built? How do you take that and put it into a traditional finance box?
This is probably the most crucial part to understand. It's about the regulatory structure. See, unlike a lot of these spot Bitcoin ETFs, which were approved under the Securities Act of 1933,
Right, 33 Act.
DOJE is filed under the Investment Company Act of 1940, the 40 Act.
Okay, and why does that matter? Is it just jargon?
No, it's a really big deal. The 40 Act is what governs things like mutual funds, traditional ETFs. It comes with much stricter rules, things like diversification, how much leverage you can use, disclosure requirements.
Yeah.
It's all designed for more investor protection.
So regulators are probably more comfortable with that framework, especially for something like Dogecoin.
Exactly. It makes it more palatable, particularly for a volatile, unconventional asset. And this structure leads to the next key point. DOJE is not a spot ETF, meaning the fund itself won't actually hold Dogecoin tokens directly. Zero actual Dogecoin in the fund's wallet, so to speak.
Okay, so how does it track the price then?
It uses a subsidiary based in the Cayman Islands. And that subsidiary deals in futures contracts and potentially other derivatives linked to Dogecoin's price.
Ah, derivatives.
Yeah.
So financial instruments whose value is based on Dogecoin's price, but isn't the coin itself.
Precisely. So if you invest in DOJE, you're buying a product that aims to track Dogecoin's price movements via these derivatives. You're not buying Dogecoin itself within the fund.
That's a really important distinction for people to get. You're getting exposure through a kind of financial wrapper, not direct ownership. Different risks, maybe different tracking performance compared to just holding DOGE.
Absolutely.
So, stepping back, what's the real significance here? Why does this matter for, the average investor or the broader market?
Well, for investors, the main benefit is accessibility. Let's face it, holding crypto directly can be a hassle.
Yeah, wallets, keys, exchanges, security. It's a
Mhm.
lot for some people.
Right. Wallet security, managing different exchanges, the tax side can be confusing. An ETF like DOJE just lets you get exposure through your normal brokerage account. Simple, like buying a stock.
It lowers the barrier to entry, basically.
Massively, it removes a lot of those operational hurdles. And then there's the institutional side. This is potentially huge.
How so?
Many big institutions, pension funds, endowments, they have rules, mandates that stop them holding assets directly on, say, unregulated crypto exchanges. Too much risk, custody issues, compliance headaches.
Makes sense.
But wrapping Dogecoin exposure into a regulated 40 Act ETF, suddenly it fits within their existing frameworks. They can access it through regulated channels they already use.
So it could bring in new money, capital that wouldn't touch Dogecoin directly.
That's the idea. It creates a bridge for potentially larger, more conservative pools of capital to get involved if they choose to.
Okay, but does this ETF actually make Dogecoin safer? Or does it just give it a veneer of legitimacy?
That's the million-dollar question, isn't it? And where misconceptions can creep in. Look, having an ETF on a major exchange definitely lends an air of legitimacy. It makes it feel more mainstream, more accepted. That's a psychological factor.
But it doesn't change the underlying asset.
Exactly. The inherent volatility of Dogecoin itself. That doesn't magically vanish because it's in an ETF wrapper. It's still Dogecoin underneath. In fact, the derivative structure can introduce its own complexities. Things like roll costs for futures, potential tracking errors, where the ETF price might not perfectly match the spot price.
Right, so legitimacy perception,
Yeah.
fundamental risk reduction, not really.
That's a good way to put it.
And this isn't happening in isolation, right? We need to see this in the context of other crypto ETFs.
Absolutely. Think back to earlier this year, the launch of the spot Bitcoin ETFs. That was a watershed moment.
Yeah, they pulled in billions almost immediately.
Billions. And it definitely gave Bitcoin a price boost, but also, perhaps more importantly, it solidified that feeling of traditional legitimacy for Bitcoin. It set a precedent.
And the regulators, the SEC, seem to be changing their tune slightly.
Definitely softening. Historically, they were very cautious, very resistant to crypto ETFs. But things are shifting. The market's matured somewhat. There's been relentless industry pressure, maybe looking at what other countries are doing.
So they approved spot Bitcoin, then spot Ethereum ETFs back in July.
Correct. Those were pivotal decisions. And that shift really opened the door for products like DOJE and also for the Rex Osprey XRP ETF, ticker XRPR, which is expected around the same time and uses the same 40 Act structure.
Okay, so it really does feel like a bigger shift is underway. What are the broader market implications then, beyond just DOGE and XRP getting ETFs?
It signals a deeper, faster integration of crypto into traditional finance. That seems undeniable. Potential impacts? Well, first, you could see more institutional money flowing not just into Bitcoin and Ether, but potentially into a wider range of digital assets if they get the ETF treatment.
Yeah.
That changes market dynamics.
More capital, potentially less volatility, or just different dynamics?
Different dynamics, certainly. More diverse participants. Second, this 40 Act model used by DOJE and XRPR could become a template, a way to get crypto exposure within a structure regulators are more comfortable with, boosting the legal legitimacy perception for these kinds of funds.
A new pathway for crypto products.
Possibly. And third, it just means more diversification for investors within the traditional system, access to altcoins, even meme coins, through your brokerage account. Whether you think that's a good thing or not, the options are expanding.
Interesting. So as DOJE launches and we watch this unfold, what are the key things you think our listeners should be keeping an eye on? What should they monitor?
Okay, number one, watch the initial trading volume and fund flows. First few days, first few weeks.
To see how much real demand there is.
Exactly. Is this a niche curiosity or does it attract significant assets? That tells you a lot about market appetite for this kind of thing.
Makes sense. What else?
Number two, fees and tracking difference. Really dig into the fund's prospectus. Because it uses derivatives, its performance might not perfectly mirror holding actual Dogecoin. Understand the expense ratio. Be aware of potential tracking errors. Roll costs from futures. These can impact your return compared to the spot price.
Good practical point. And the third thing?
Third, watch the regulators, specifically the SEC. How do they react if or when similar filings pop up for other meme coins or maybe lesser-known altcoins? If DOJE launches smoothly, operates without major issues, and doesn't attract negative regulatory attention, it could genuinely pave the way for more. It could signal a real opening of the gates.
So it's kind of a test case in a way.
In many ways, yes, a test case for meme coins in regulated finance.
Wow. It really is quite something. An asset that started as basically an internet joke, now potentially trading via a regulated fund on Wall Street. DOJ's launch feels like.
Well, a marker point. It really is. A landmark, maybe. In this ongoing merger of digital culture and traditional finance. It's an experiment, it's a bridge, it's a signal, all wrapped up in one ETF. And it does leave you with a big question, doesn't it? If assets that don't have traditional utility can find a home like this on Wall Street, what does that really say about how we define value in finance today? Is that definition evolving? You know, what other digital assets, things we maybe dismissed before, could follow this path? And how will the old guard, the traditional investment vehicles, adapt to this, well, this ever-expanding universe?
Those are definitely some fascinating questions to chew on as we watch this all play out. A new era, perhaps. We'll certainly be watching. Thanks for breaking that down.
My pleasure. It's certainly one to watch.